Namaskar, this is Akhilesh Bhargava. Welcome to Tit-Bits on Business and Finance with me. Let's discuss some interesting and independent reports on the state of the global and the Indian economy. A recent report of IHS Markit says that the global economy is now transitioning from a recovery mode to an expansion mode now that the COVID recession is over. The report says that the global economy, which contracted by 3.5% in 2020, will expand by 6% in 2021, the best ever annual expansion of the world economy since the oil crisis of 1973. That is a sharp rebound of growth worldwide that we are witnessing. As a result of this, the global GDP in June 21 quarter exceeded the pre-pandemic GDP that had peaked in quarter 4 of calendar year 2019. According to the Markit report, the recovery of the world economy began in China last year. Thereafter, it was seen in North America, which led to the revival of the overall world economy. It says that the American economy hit a peak in May 21, which is just last month, such that it exceeded its own GDP peak, which was seen in the pre-pandemic times of December 2019. The next to reach a peak by September 2021, it says, will be Africa and the Middle East. And so will be the case of the economies of the European Union and Latin America, which are expected to peak by December 2021. It speaks nothing about when will India peak. According to the Markit report, the reasons for the present rebound of the global economy are many, and they are worth a consideration. It says that the lifting of the pre-pandemic related restrictions have reopened economies. People have started going about their jobs to resume normal activity and growth, and thus growth has taken off. It then says that the rise in vaccinations has led to the easing of travel and social interaction, which in turn has triggered consumer spending and growth. Consumer spending has been boosted also due to the pent-up demand, the easing of the labor market conditions, and the fall in household savings rate, which had touched exceptionally high levels due to the COVID scare, and people were not willing to spend, because of which it had decimated the overall economic growth also. Markit further says that with demand picking up, corporates are replenishing their depleted inventories, and with the GDP hitting a peak in many nations, it has, of course, triggered fresh business investment and incremental growth in the respective economies. The economies of commodity exporting nations, the report says, are booming due to a rapid increase in commodity prices almost across the board. And finally, it says that a resurge in global demand and exports has fueled growth in export-oriented nations. While the Markit report talks of the ongoing recovery and expansion of the global economy, it has also raised red flags of caution to point out those factors because of which the growth can be derailed or delayed. The first red flag it raises is that the risk of a COVID resurgence and flare-up can derail growth. We are already witnessing that in Japan, Taiwan, Australia, Malaysia, Vietnam, Israel, UK, and many other countries. If COVID rises, the economies could go into lockdown again and growth will be impacted. A rise in COVID again will be a huge setback for global growth. So that is the first red flag that it points out. The second one it says is that production delays due to global supply chain disruptions, as we see in the case of shortage of semiconductor chips, which is impacting many industries, including automobiles, telecom, electronics, and consumer durables, is also impacting growth. All these industries like automobiles, for example, have got consumer orders on hand, but they can't supply the goods for want of chips. The third red flag is rising commodity prices and inflation, which will ultimately dampen consumer demand due to resistance from the buyers, resulting in a slowdown again. Markit then says that the present boom in global growth has been also fueled due to tons of money sloshing around in consumer markets because of the huge fiscal stimulus in countries like USA, which have pumped in trillions of dollars in the hands of households and consumers. This money will some point of time will be withdrawn, and the withdrawal of this liquidity and fiscal stimulus in due course of time will be a drag on global growth then. It says that it is expected that the post-pandemic surge in growth will anyway subside by mid-2022 with the satisfaction of pent-up and the backlog of demand. And then the global GDP will settle down to its normal annual growth rate of 3% as against the 6% growth rate which are now experiencing and expecting in 2021. And finally, the red flag to growth that it says is that the growth has also happened in recent months due to the expansion in fiscal deficits of governments to 10% of global GDP as against their normal of 3% of GDP. Governments have had to borrow, they have had to spend in order to kickstart their economies, and that will come down. It is expected that fiscal deficits of governments worldwide will come down to 4% of global GDP, which will lead to a reduction in government expenditure and the growth that it induces. Growth and GDP have already peaked and are exceeding their pre-pandemic levels in major economies like the USA due to consumer demand having come back with a vengeance. This in turn has triggered fresh investments there, which is not so in the case of India, where consumer demand remains depleted and uncertain, whose economy is far from hitting a peak to exceed its pre-pandemic levels, and where investments in new projects stand at a 16-year low, which symbolizes the overall emaciated and weak state of the Indian economy. We are far away from seeing when does the surge take place on a durable way, and when do we hit a peak, and when do we exceed the pre-pandemic levels of growth that had taken place. The Reserve Bank of India has already cut its growth forecast for India for the current financial year from its earlier expectation of 10.5% to 9.5% now. And most reports about the current state of the Indian economy do not dispute its uncertain and weak conditions. The highlights of the latest report of the rating agency Standard & Poor on the state of the Indian economy are worth having a look at. S&P says that household savings in India have been depleted, and thus consumer spending according to S&P will be hit, because it says that consumers will desire to rebuild their depleted savings and not indulge in spending. If that be the case, growth will take a long time to come back. It then says that the finances of the central and state governments in India have worsened, which will affect government spending, which today is badly needed in order to kickstart a stalled economy. With the private sector unwilling to spend, it is the government which will need to spend. But with worsening finances, its ability seems to be constrained. S&P then says that while the monetary and fiscal policies will remain accommodative, any new fiscal stimulus is not forthcoming in India and is thus ruled out. It says that there has been a permanent damage to private and public sector balance sheets, which will restrict and constrain growth in India for many years. And finally, it says that while the Indian economy has turned a corner now, the recovery, however, will be less steep as compared to the bounce that we saw in late 2020 and in the early part of 2021. Thus, what is seen is that there seems to be an uncertainty about growth which is not getting predicted accurately. A similar perspective has led Moody's, the other global rating agency, to cut its growth forecast for India for the current financial year from its earlier estimate of 13.9% to 9.6% now. Moody's says that rising uncertainty has reduced consumer and business confidence in India, and that is where the worry lies. Unless the consumer does not spend and the businessman does not invest, no durable and rapid revival and expansion of the Indian economy will take place. It is that which needs to be triggered. And if along with that, the government's financials itself are limited, then the question comes, who will spend, who will invest, and when will the economy get revived? This is Akhilesh Bhargava signing off till we meet again. Namaskar.
Now be the first to know about the latest updates on our new news app. Go on your Android or iOS, search for HW News Network. Download our app, choose the language you prefer to get updates in, and be up to date with the latest news.
If you like this video, please share it and we would love to hear your comments in the comments section down here. Also, please do like our Facebook page and follow us on Twitter to get minute-to-minute news updates. For more such shows and videos, well, subscribe to our YouTube channel.